So we're going to do something intricate here. We're going to talk about the whole tech landscape. My guest today is Sami Badri, Head of Investor Relations at Cisco.
Things have transformed in about 10 years. In 2015, you had steady state IT. People would buy servers, buy switches, buy their kind of IT needs in the private cloud, which is their own data centers. And then there were opportunities to deploy things to Amazon Web Services and other public clouds.
That took Microsoft to a new level, took Oracle to a new level.
So here we are in 2025. You're starting to see more enterprises and companies figure out what they want to do in AI.
Let's turn to Nvidia, because that has changed the world, obviously.
OpenAI was leading the race. If you wanted to keep leading this race, you needed to buy a lot more GPUs. And it turned out there was really only one company that supplied all those GPUs because only one company directionally bet on that technology. That was Nvidia. You now have gone on a large language model to learn off of real-time information on the internet and with real-time news flow.
So it's pulling data constantly.
Constant.
Sounds like Terminator. One of the issues with these chips is they use a lot more energy. The fear is that, we may build this stuff and we won't be able to plug it in anywhere.
Power scarcity is a very, very big problem.
And that's why you're seeing deals for nuclear power.
Correct.
This is the limiting factor in the US. If we don't solve this problem, we got a problem.
You're really asking a supply chain to ramp up to a degree that I don't think the US has ever seen.
Do you think we can do it? And how soon do we need to do it?
Immediately.
Hi, this is Steve Eisman, and my guest today is Sami Badri, who is the Head of Investor Relations at Cisco. Sam, welcome to the Real Eisman Playbook.
Thank you, Steve. Thank you for having me.
Glad to have you. So we're going to do something intricate here. We're not just going to talk about Cisco. We're going to talk about the whole tech landscape. And I'd like to start by climbing into a hot tub time machine, going back in time. Let's call it 2015. So Nvidia obviously exists, but its chips don't have anywhere near the importance that they have today. So before we even get to that, Sam, tell us about your background and what did you do before Cisco?
Yeah. Again, thank you for having me. And this is a great topic to talk about, especially how things have transformed since essentially in about 10 years, right? So graduated college, went right into consulting, did that for about a year and a half. I joined Credit Suisse, and I started out in a role really that was more to do with markets. And then I found myself joining the team in the equity research department, working for the analysts who covered Apple, IBM, HP, Cisco, Arista, a bunch of other stocks, including Nokia and Ericsson. At some point, I spun off that team and I launched the data center research team, which included companies like Equinix and Digital Realty. Then my former boss left. I took on networking, which was Cisco, Arista, Juniper, a couple of others. And I kept on building out my coverage. Then when Credit Suisse was acquired by UBS, I essentially thought that this was the next chapter for me. I considered some external opportunities, ended up accepting one. And then in that process, Cisco and I had a conversation, and I joined Cisco as head of investor relations to work on some of the engagement for them.
So you've been head of Cisco's investor relations for 2 years.
Yeah, we're approaching 2 years.
Okay. So again, let's go back in time. It's 2015. Nvidia, it's a growing company, but it doesn't have real importance yet in the tech ecosystem. Why don't you lay out for us, what's the tech world like? What are the component parts? Who's important? Who's not important? Let's start there.
Yeah. And if you recall, back in 2015, trillion-dollar market cap companies weren't really a thing, right? Companies were
They might even be unimaginable at that point.
Correct. Like the laws of large numbers really did apply to every single company in the S&P and in the actual exchange and indices, right? So these principles held very firm. What was going on in 2015 was actually the emergence of the public cloud for enterprise. And there was a huge debate between—
So what's enterprise,
sure.
What's public cloud? Just so everybody's on the same page.
So when we say enterprise, we're talking about, think of your Fortune 500 companies buying IT resources to power up their businesses and applications, right?
Servers, switches, et cetera.
So imagine a transportation company trying to power up their applications and business processes. They would go to a various cohort of IT system integrators like Cisco, Dell, HP, get the servers, get the switches, power up an environment or an IT environment, and then run their applications on that environment in a data center, right? So we call that on-premise or private cloud environments.
So in other words, I'm a company, I've got all these servers to run my trains. Those servers sit in a warehouse that I own, and it's just my servers.
Correct.
And that was the world way back then.
Correct. You had some variations of this, like for financial services, you had some exchanges that needed to be centralized in co-location data centers, but really things were still very uniform or one-dimensional from the way IT was being run. And you had the emergence of public cloud, things like Amazon Web Services starting to ramp up. So that was the conversation.
So in other words, Amazon would give you, instead of my train company running its servers in its own warehouse, they would put them in Amazon's warehouse.
Yeah. So,
and why would they want to do that?
The simple explanation was, instead of writing a check to buy the servers and switches and your data center environment, and that's like a capital expenditure. So writing a check one time, you move to more of an operating expense model. So, paying monthly for the resources or the needs that you needed. So you no longer needed to own the server. All you had to do was pay a monthly bill to Amazon based on usage, and you would have your same compute environment powered up, kind of like a rental model versus an owning model.
Okay. So public cloud enterprise was the big news back then.
Yeah, that was like the big news. And also it was, we talked a lot about IT spend and the emergence of security spend to secure all these applications and environments. And if you were an analyst or an observer in the industry, what you really paid attention to was overall IT spend, and things really did not move around too much, with the exception of whether or not you wanted to move things over to the public cloud at Amazon or not. That was kind of the hot topic, was which application in my private cloud environment can move to the public cloud. So that was the big sensitive kind of discussion that was going on around that time frame.
And just walk us through, the chip world back then. Like what chips existed and how commoditized was that business?
So back then, if we just simplify it to, the kind of chips that we most talked about, there would probably be three types. It would be the central processing units, which goes into most of the world's servers. Things like companies like Intel would sell those, and those would go into servers, and enterprises like a bank or a transportation company would buy those. The second type would be graphic processing units. That was something that Nvidia started selling, and that mainly was for video gaming and for other kind of process-intensive workloads. But at that time, a GPU was way too intensive for
So that
enterprise.
is called the GPU, and the Intel chip is a CPU.
Correct.
Okay.
Correct. And then the third class was created by Google, which was a TPU, a tensor processing unit. And that was designed very specifically by Google for their specific workloads, which were Google Search and YouTube, and that scaled over time. So they did a purpose-built chip for their environment.
And what about memory chips?
So memory chips would really kind of mirror and hug the kind of processing unit needs you needed, right? So memory is I would describe it as elastic component when it comes to building an IT environment, depending on what application you had. So if you are a media company, you need to save a lot of media in your data center, so that way users can access it through a switch. So it really kind of came down to the type of business. But for memory, really kind of came down to how much storage needs you needed for the corresponding compute application that was running in the data center.
So if you were an enterprise, you would buy Intel CPU chips to run your business, and you buy memory chips basically to store all the information.
You would buy a storage device from a company like HP or NetApp, or at the time EMC. And within that storage device, you would have access to memory bandwidth, something called HBM, or older architectures. And that's how you would get your storage. It depends. Every company was a little bit different, and everyone had to kind of toggle with how many IT needs and storage they really needed.
And with all those chips outside of NVIDIA's chips commoditized pretty much, or not necessarily?
Not necessarily. I wouldn't describe them as commoditized, because they still had compelling economics. And the business of designing chips to this day is still a very rigorous and competitive field, right? So there continues to be debate on emerging companies that are designing and competing. And it's because you just have armies of PhD engineers working on redesigning, retuning, playing with signals, playing with electricity usage. Again, some of these are directional bets. CPUs were probably considered a little bit more standardized, which made the playing field a bit more competitive. But as you moved up to GPUs and TPUs, the leagues really changed. right? It was a much more advanced IP, and think of those as like extreme directional bets, which invited a lot less competition because at the time they were directional bets.
What do you mean by directional bets?
So if you were Google and you were building TPUs, you need to have a massive scale search engine that essentially requires huge volumes of queries, but all kind of coming in the same way and going out the same way with their result. So like a search result on a page. You just had to plan on processing millions or billions of those, right? So you needed a very specific type of chip. For Google, a TPU was a directional bet that they needed a chip architecture that could do billions of queries at very specific speeds and specific locations. So for Google, the TPU was a directional bet that has paid off significantly. When you go through the classes, so think of a CPU as almost like a Swiss Army knife. It can have a little pair of scissors, it can have a little knife, it can have a nail clipper maybe, right? When you go to a GPU, it's no longer like a Swiss Army knife. It's now like more restricted with number of features or capabilities, but it can do a lot more with the fewer features it has. And then a TPU is like a machete, right? It's like, or a sword even, right? All of a sudden, it is used for one key feature and it can do it significantly well. And it kills. You use it, it's very effective, right?
Okay.
So those are the directional bets.
So I remember back then, like the conversation was always, who's moving to the public cloud and is anybody else moving to the public cloud other than Amazon? Is anybody else going to provide that service? And that was a big discussion for years. And, that took Microsoft to a new level, took Oracle to a new level. But other than migration to the public cloud, was the ecosystem healthy? How much was it growing back then?
So IT spend would grow anywhere between low single digits and mid single digits. Maybe in a good year, you'd have a little bit better than that run rate average. And the ecosystem was healthy. There continued to be emergence of new technologies. So for example, you had AMD entering the scene that competed against Intel and
obliterated them.
I mean, they did frankly very well. They progressed very well in Intel's key competitive fields. So that was a very good execution on their part. Even a company like Cisco, we had our own emerging competitors. That included companies like Juniper and Arista, and there's a big tail of other companies that compete against us. You had cybersecurity companies that emerged that could kind of do networking, but really focus on firewalls. So it was a competitive market, but really it looked structurally a lot different than it looked today. And back then, the sensitivity of moving things to the public cloud was very, very, I would say, charged.
What do you mean charged?
So it was, if you were a bank, like a very good example is a European bank, this thought of moving a very sensitive application with sensitive data to someone else's infrastructure. And if there was a leak, that was considered like
death.
Yes, that was like your
worst nightmare. So in other words, if you're a European bank, you've got all these servers, you're running transactions, you've got people's money, you can't make a mistake. And so historically, that bank would own its own servers. They'd be on its own property somewhere, and they would control everything. So now moving to the public cloud would be cheaper and more efficient, but if there was a screw up, it's your head, is basically what you're saying.
Yes, correct.
Reputational risk was huge.
Correct. And if you look at the different breeds of companies. So European banks, very risk averse to this idea, initially at least. American banks, probably more open to it, to adopting the technologies, testing them out. And then if you look at other companies and other industries, right, you have a huge variation of sensitivity from like absolutely no public cloud to like, yeah, maybe we can deploy in public cloud and grow and test this out because we don't have data that's that sensitive. So you had varying tiers and variations of this.
So let's turn to Nvidia, because that has changed the world, obviously. What do Nvidia's chips do that other chips didn't do? And why is that so revolutionary and is able to create AI?
Yeah, it's a good question, and I'll try to kind of...
Because people just sort of accept it. This is the case. But I've never heard an actual real explanation in plain English as to what happened.
I'll try to give like the best kind of layman's explanation. So what CPUs do, which are really the main chip in a lot of servers today, they can make do or process reasonable amounts of data for a fairly well-running application very easy. And they can do many variations, right? That makes them a very flexible and kind of a Swiss Army knife type chip. For GPUs, what started emerging as a common theme was there were applications that became a lot more compute intensive for what they were doing. And a good example is gaming, right? All of a sudden, the graphics started looking more realistic. You had a chip now all of a sudden performing by consuming a very preset volume of information. And the goal of the chip was present this information in a very real world looking application or viewing screen for a gamer, right? So it now had—
So it became much more realistic.
Correct. Now, that same engineering architecture, right, of taking data and some interactiveness and making that work for a game, right? This process, think of it as almost like a matrix matching, which sounds like a buzzword, but I'll try to simplify this, is you basically need now a chip and a circuit board to crawl a preset amount of data, and you need an outcome as fast as possible, right? So what GPUs really were able to do using the technology they did for gaming was they took a preset volume of information. Think of them as like data pools, like the information you want to train a model on, which Nvidia talks about. And you want this model to have characteristics after it's been trained. So think of this as like think of it as an Excel file. This Excel file has billions of columns and billions of rows, and every single matrix point, the intercept point of every single cell, has a specific value. But you needed to run a training exercise on top of this Excel file that at the end of this training exercise, the byproduct, which is a model, has to act, look, and do certain things, right? Like if you were to ping it a question, it would respond to you in a certain way. So if you wanted to teach this Excel file a bunch of geographic things about countries, if you pinged a query to this specific LLM, it would be able to respond to you with a high degree of precision on cities, countries, geographies.
You're not going to get that from a CPU at all.
No.
You can't.
So using the same example as like the Excel file that has billions of rows, a CPU really would only be designed to crawl maybe 100,000 rows and 100,000 columns. A GPU can do billions of columns, billions of rows. Using the example from earlier, which is Google, that could do trillions of columns, trillions of rows, assuming the data is still very uniform, right? I think the big kind of breakout data point for NVIDIA was when we started training these models and their efficacy started improving and their interactiveness started also improving. People all of a sudden started really ramping up the way they train these models. So now you weren't just talking about one Excel file with billions of columns and billions of rows. You start talking about series of Excel files, all with billions and billions and billions. And this essentially started developing very sophisticated large language models. And that was kind of like the birth of AI.
So I'm going to give my own personal example. So I didn't use ChatGPT or Perplexity until probably the fall of last year. And I figured I'd ask a question that was near and dear to my heart. So when I was in college, I took a lot of philosophy classes. And one of the questions that we always dealt with was, is morality absolute or relative? And there was a book that I read back there by a certain philosopher that was important to me. I really liked it a lot. And then years later, I developed a relationship with Judge Richard Posner, who wrote a book on a similar topic. So I asked, I think it was ChatGPT, I asked the question. I said, is morality absolute or relative? Write me a 5-page essay, first in the style of Alistair McIntyre and second in the style of Richard Posner. I figured that's not an easy question. 10 seconds later, it spit out both. And that you're not going to get from a Google search engine.
Yeah. And like what that did was it sucked up all the information on both of those authors and it absorbs it into kind of a back end. And then basically all that sits as almost like a database, like a very active, ready to go database with like kind of a personality or features. And then when you ping it, it will respond to you in very specific structures and formats of your specific desire or query, right? So search engines could do bits and pieces of this and kind of walk you to it. But what you're getting now is like you're getting a byproduct
very
delivered.
sophisticated answer by basically an expert.
Correct.
In seconds.
Right.
So let's talk about how that is changing the tech landscape. I mean, obviously people are buying NVIDIA chips like crazy. What are they trying? What are all the various people who are buying them trying to do with them?
So there's two races. There's the race to develop the most capable large language model, which is something you probably hear about the most in the news. That's companies like OpenAI, Anthropic, Google are involved.
And what does
in this.
that mean, a large language model?
So a large language model kind of goes back to that example of the Excel file, right? You take this Excel file with billions of rows, billions of columns, and there's specific content that's on there that you want a kind of a byproduct to learn off of. And that byproduct is a large language model. But before it's a large language model, you need to give the right information to develop to a certain outcome, to a certain characteristical outcome, right? And so you have like a lot of companies that are developing these large language models, tuning up with different data sources, different characteristics, and what they're trying to solve for is the best and most resilient or durable communication system or large language model application, right? So that's like what ChatGPT is. So if you look at the early versions of ChatGPT, it was working on static data, right? Data that was kind of, pulled from the internet or pulled from sources, and the model was trained on that static information. And when you would chat with ChatGPT, it would only respond to you with things it learned. Now, all of a sudden, when we're in the later stages of what came after ChatGPT 3 and GPT 3.5 Turbo and all these other versions, you now have gone on a large language model to learn off of real-time information on the internet and with real-time news flow. So you have a much more advanced large language model application.
So it's pulling data constantly.
Constant.
Sounds like Terminator.
Maybe at some point. Yeah.
Yeah. Well, it's not an idle question.
Yeah. So it's you have companies developing these large language models to make them as smart and as sophisticated, and for some companies like Anthropic, purpose-built. So Anthropic is specializing more in large language models for programmers and coders, whereas ChatGPT is developing their applications more for general usage and maybe even deep researchers, right? So you have these kind of these like areas or these expertise that are being developed in these large language models. So there's the training, and then there's the apps that are being offered based on those on that training.
That's one race.
That's one race.
What's the other race?
The other race is the whole world, from governments to enterprises to service providers, trying to understand how AI technologies, so everything from large language models and the corresponding app that communicates with that model, how that can either be a revenue generating event or a cost reducing event. So a good example would be advertising. So how do you get a better ad targeted to the user at the right time for them to go buy the product that's being advertised in there? That's like a revenue generating event. You have better ad targeting, which means you're going to have better conversion of targeting to revenue. And that's like an example of like increasing revenue using better technology or better targeting capabilities. The cost reducing is a different example, like a call center. Not everybody who calls for help or a support line needs to talk to a human being. Some of these things can be resolved very easily. An example is for like maybe a bank or like a credit card that got shipped to you and you need to activate it. That could be an AI agent that you interface with on the phone. It can look up things in a database, which is in a restricted.
That's a cost-saving measure.
Correct. So every company right now is on a path. Any company who's not developing an LLM is a consumer of an LLM, is trying to figure out, is AI or are these LLM technologies, are these revenue generating events or are they cost reducing opportunities for those companies?
But I'll just press that for a second, because one of the stocks that I looked at very carefully was Accenture. And Accenture's outsourcing business has been doing very well. And what they kept saying was that most companies do not have their data in the correct total format so that they can actually use AI. So they were hiring Accenture to basically clean up the whole thing and put it into one place so that they actually could use it. And if that's the case, then we're still very early in the AI story. Like early stages.
Absolutely. Like I'll give you back to the analogy of the billions of columns and billions of rows in Excel. Well, what if the data that was in all of those cells wasn't even numerical? What if they were words? What if the words
were
a
book?
Like a book. What if they were all in different languages? But the LLM that you're trying to train and develop to communicate with this data set didn't speak that language or didn't get trained on that language. You all of a sudden have like fractured technology, right? So think of this as like in the enterprise world, every enterprise and every company has data that they store, but it's not all usable. Some of it does need to be reformatted. So that is a whole other dynamic that's going on under the surface for most companies.
So let's walk through the landscape. So today you've got GPUs of Nvidia, you've got AMD trying to compete with Nvidia to a degree in the GPU world. Walk me through the rest of the tech landscape that existed in 2015, obviously still exists today, and how that's being impacted.
Yeah. So in 2015, you had, let's just call it steady state IT. People would buy servers, buy switches, buy their kind of IT needs in the private cloud, which is their own data centers. And then there were opportunities to deploy things to Amazon Web Services and other public clouds. And they have companies since 2015 have really ramped up that effort. There is a lot that has moved to the public cloud, and there are companies that just built their entire business on public clouds. So there are software as a service companies that have been built and only exist on public cloud.
So they own nothing. They just rent.
They quite literally only rent. They pay a fixed cost for usage, and they develop new products and features. Those products and features are pushed to customers. They obviously have a premium relative to their cost basis that they're being charged by Amazon and other public cloud, and they offer that application to users, right? So you have that ramping. And then I would say right before AI really kind of picked up and right after COVID, you had this big reallocation of IT spending resources to really enable work from home. And that really accelerated a lot of data center investments, that accelerated a lot of public cloud infrastructure.
Everybody went out and bought a laptop. Every company realized they had to be able to sell everything online because everybody was home. So there was massive expenditure by enterprises on, call it, all the stuff that they sold.
Correct.
And that lasted probably through like 2023, maybe 2022.
Yeah, you had like an
orgy of expenditures.
You essentially had a significant spend overhaul to build resiliency or improve network connectivity. So everyone could be in the office or from home and still do their jobs with the same levels of productivity.
Right.
Yeah, and then
so that pulled forward a lot of spend from enterprises on traditional stuff.
On traditional stuff, that's right. Then Nvidia comes around, and they were already selling GPUs to a bunch of other companies.
What year are we talking now?
We're still talking like pre-2023. So like even before ChatGPT really came on the scene, OpenAI was already developing large language models and buying GPUs and trying things out. I think the breakthrough moment was when they finally trained up a large language model and created an app to interact with that model, which was ChatGPT. And when you would query it, it actually would respond to you with a pretty good level of quality response. And that was the wake-up moment of...
And what would that have been?
I remember this very well. I think the first time I heard about this was in December of 2022. And people were like, hey, you should really try this out. Like, this thing actually works. You can ask it whatever you want. I was like, okay. I tried it out. I was like, yeah, that's pretty nifty. Like, it's cool. It's awesome how they got that to work. Where this really snowballed was in January and February when we started seeing usage numbers sharply increase, and we started seeing more activity, more byproducts, and just more capabilities all start to accelerate. And at that time, the market was still kind of digesting all the information and what all this meant. But it became very clear that OpenAI was leading the race. And two, if you wanted to keep leading this race, you needed to buy a lot more GPUs. And it turned out there was really only one company that supplied all those GPUs because only one company directionally bet on that technology. That was Nvidia. So fast forward to today, right? A couple of years after 2023, you now have a couple of companies trying to compete in the GPU race. Nvidia still has a material lead on everybody else. They don't only have the right chips. They have
By the way, let me just interrupt you just one second.
Sure.
I mean, the astonishing thing about Nvidia to me in the most recent quarter was not that they beat estimates or anything like that. You just look at the numbers. The revenue was up 69% year over year. It's a $3 trillion company whose revenue is up. I mean, companies with 5 billion market caps grow revenue 69%, not 3 trillion. So what the implications of that are it's hard to even get your mind around that.
100%. And the products, each individual product has like thousands of components and elements. These are very sophisticated devices and computer parts. So, yeah, like you said, like they grew significantly on actually a very large revenue base, right? So fast forward to very recently, right? Nvidia is executing. They're constantly coming up with a new GPU design. They're shipping their newest product, which is called Blackwell now. And you really have this race to build out advanced AI cloud infrastructure globally and to develop the best grade large language models. And enterprises haven't really felt the heat to really roll out their own version of an AI-enabled application or a generative AI capability that's revenue generating and cost reducing. But once you start seeing a few examples, they'll be forced to move forward.
So let's talk about, so you've got the chip world, obviously NVIDIA's selling chips like crazy. Let's walk down, I'm whomever, I buy all these chips. What do I need to buy in addition to the NVIDIA chip to do this? And how is that, the companies that do that, how are they doing? Which obviously will get us to Cisco.
Yeah. So if you're trying to train a large language model, you probably need one of three things. You need a place to store a bunch of compute needs. So you need a lot of electricity and power. So that's number one.
Yeah, we're going to talk about the electrical situation.
And then you need a bunch of GPUs and switching gear from Nvidia.
What's a switching gear? What does that do?
So those are the devices that connect to these GPUs. So the GPU will sit in something that looks like a server, and that server will connect right into a switch. And that switch really is kind of the bridge of information that allows incoming packets of data to go into the GPU, and then also vice versa, packets of data in the GPU to leave back to the end user.
Okay.
So it's like a bridge between the two, the end user and the actual compute resources, the GPU.
It's a connector.
Correct.
Okay.
Correct. And then the third thing you need some pretty strong developers, like software developers that understand how to build large language models, how to train them, how to efficiently use a GPU, and the IT resource has been allocated. So once you have those three things, you can start developing your own application or developing like a superior large language model based on the available resources you have.
So let's talk about like, what does Dell do and Dell's competitors do? What does Cisco and your competitors do in the old world and the new world?
So in the old world, a couple of companies sell servers. We'll say Dell and HP Enterprise are probably your two US large players that sell servers. They sell them in various SKUs with various components. So some of them will include CPUs, and then now today, some of them include GPUs. So if you wanted to buy a bunch of server gear, you would probably pick up the phone and call Dell or HP. And they've built great businesses with great supply chains that can service a good amount of demand. There are a bunch of other companies as well, but those are the two large American ones. You also need some switching gear to make sure that all those servers are connected to the right connectors, right? So there are a couple of options. Companies like Cisco, companies like Arista, there are some other vendors as well, but even Nvidia is in this race, and we can kind of get into where they really fit. But those are the different kinds of.
Well, in some cases, NVIDIA requires you to buy their switches if you want to buy their chips.
Yes. If you're building a large language model developer hub, you probably need some NVIDIA GPUs, and you're probably going to buy something called the NVLink aggregator, right? Which is a device that's connected to those GPUs to allow your GPUs to work as fast as possible, right? So you need the fastest highway for your data to run and for your large language models to be trained on. Now, that's if you're training a large language model. And Cisco does do a little bit of this. We do connect into GPUs for certain cases, but some companies, they don't have the engineering flexibility to hire various people to use various components. So they just lean on NVIDIA for a lot of this stuff, all right? You also need other things too, as you kind of further develop in this race, in this development cycle. You need the right kind of storage resources. Those are stuff that come from NetApp and some other providers. You will need the right optical equipment as well to make sure that the data processing through your GPUs and your servers and your switches are all running as fast as possible. So you need a various blend of things. So yeah, you can go now and shop at a lot of the places, but it kind of depends on what you're trying to do. If you're trying to train a large language model, the very simple choice is to pick up the phone, call Nvidia, and buy kind of a full suite of gear from them. If you're building something that's much more sophisticated that includes model inferencing, that's when you're constantly pinging or communicating with a large language model, you have many more options, right? You all of a sudden have a much wider range of vendors that can help you build that network infrastructure.
So let's just talk about the tech landscape outside of Nvidia today. I mean, the enterprise spending outside of Nvidia has been moribund now for a couple of years because there was such a pull forward of everybody buying everything because of COVID. So you've got this sort of yin and yang where enterprise spending of old stuff is either flat to down and everybody's buying the new stuff up. So what's the landscape look like health-wise? Is that over? Is enterprise spending coming back for the old stuff as well? Like, where are we?
So the old stuff still has to be maintained. There are still switches that aren't even from the current cycle. Like there are switches that weren't even recently sold in the last 5 and 10 years that are still working in production, that are still connected to very sensitive applications and data. So you will always see a constant kind of purchasing stream of dollars to network switching devices, the more traditional stuff, because you need to keep servicing the standard state of data growth and application growth. So every company, if it's growing revenues, it's probably increasing and growing its compute needs and networking needs. So it needs to keep funding the IT resources and environment that supports that revenue growth and that application need. What makes things different today is now there's a new item you need to be cognizant of, which is how much money do I need to allocate to AI IT resources? So you now have a new category that you need to factor into your IT spending decisions.
So is total IT spending growth accelerating, or is it, but what's the slogan? From Peter to Paul, buying Peter to pay Paul.
So there was a little bit of that in 2024. Where boards and CISOs, Chief Information Security Officers, and Chief Technology Officers didn't really know what to do with the AI strategy. They needed to figure out what the business decided from a revenue generating or cost reducing standpoint. So they slowed down spending in 2024.
Overall spending.
Overall, because they just didn't know. They thought like, well, wait, if AI is real for our company, our network might look completely different in 2 or 3 years than the spending decisions we're making now. That doesn't mean that spending for the traditional stuff went to zero. It's just new projects that were considered very big just slowed down decision processes and things took a little bit longer than everyone really expected. During that period of time, network assets, so the networking, the servers and all that, they all started getting worked up more. Like so they got stressed, or I would describe it as like you sweated your assets to a certain degree. And you need to keep making some investments, but you didn't do big transformative investments because AI may completely change the direction you were going. So here we are in 2025. You're starting to see more enterprises and companies figure out what they want to do in AI. It's now no longer like I'm going to blindly buy a bunch of IT gear in AI side or in the traditional side. There seems to be a better understanding. Public clouds are getting more sophisticated on how they offer these AI IT resources as well. So each enterprise is further along in understanding what they need to do. That allows them to make easier decisions on the traditional side, and allows them to be more efficient on spending on the AI side.
So total IT spending is healthy again.
It's healthy. That's right. So it's growing, but it's debatable where it is. There are other factors going on too, right? For example, in 2024. You did have some macro concerns, and parts of that was interest rates were high. Other concerns were there were election outcome uncertainties, and all of those things kind of caused spending to slow down in addition to the AI decision overhang that was occurring. So you're starting to see some easing going on in the decisions. People are more confident in where their businesses stand relative to the economy and relative to dynamics. And, things are kind of coming back. And also part of it is there's more than just one capable IT provider that can offer you AI technology. If we go back a couple of years, it was only Nvidia. Today, you have multiple tech companies that have figured out what they're going to do and what they're going to offer, including companies like Cisco that have a very formal relationship and partnership with Nvidia. So, and we can get into that a little
We're
bit
going to
later.
get into that.
But before there was only one option, and now there are many options, and time has been favorable for people to make decisions.
So you wanted to ask me some questions before we turn to Cisco.
Yeah, I mean, the best question is when you're in the tech side, all this stuff kind of makes sense.
Then you talk to normal people.
Yeah. So from your perspective, like, what has been the hardest thing to grasp about this AI trend or AI theme?
Oh, multiples. I have a couple of thoughts. The first thought is, you use ChatGPT, use Perplexity. It's a lot of fun. It's unbelievably useful. But how's anybody going to make money off of this? I mean, it's just not clear at this point. I mean, my supposition is that this is going to be a total substitute for Google search, but I'm not sure. And maybe it won't be nearly as profitable. So that's like a concern that I have because I own Google. That's one thing that I'm thinking about. The other thing that I'm thinking about is, you were a hardware analyst, basically. You did data centers, but I include that all as part of hardware. But for your whole career and most of mine, software stocks have always outperformed hardware because hardware stocks, as you know, are very cyclical, and they're on a quarterly spending model as opposed to the services as the SaaS model, where you're basically paying a monthly fee to use someone's software services. So software stocks had higher multiples, and they tended always to outperform hardware stocks. And the thing that I'm wondering about a lot is, I read this article the other week of something called vibe programming. And so what's vibe programming? Vibe programming would be someone like me who's never programmed a day in his life going on either ChatGPT and Perplexity and say, hey, write me a software program to whatever. And they would write me a software program. So people are writing software today who don't know how to write software. And the question I have, which I think is going to be something that we're going to be talking about for years, is you have these massive software companies who have massive moats around them. But if morons like me can write software, maybe the moats around some of these software companies are not nearly as high as we think. And it's going to be a lot more entrance into the software world with cheaper stuff. And so maybe hardware continues to outperform software because nobody has any idea of what's going to happen to these software companies. That's another question that I'm really struggling with.
Mm-hmm. It's a very fair point. And there are companies in Silicon Valley that are being built mainly to design software that can displace other software companies. So I would say the peak kind of discussion on that was probably in the mid-year 2024, but that thought in the back of people's minds hasn't actually left. So the concern very much still there from a tech sector perspective.
So before we turn to Cisco, let's talk about energy, because one of the issues with these chips is they use a lot more energy. And I've heard that in Silicon Valley, the fear is that, we may build this stuff and we won't be able to plug it in anywhere. So what are your thoughts on this?
This is like one of the most profound ideas. And when I first took over data center coverage, remember that was the group of companies that I had to take over after I spun off the team I was on, and I initiated on stocks like Equinix, Digital Realty, Switch, CoreSite, CyrusOne, and what was so mentally like, not difficult, but you had to mentally adjust to what you're analyzing because the business wasn't here. Let me rent out some space for your data center needs. It was, let me allocate a preset amount of power and electricity to you relative to your data center needs. So every IT rack at the time only really had an allocation of 20 kilowatts per hour. So that was like the denominating variable, right? That's like a typical Equinix facility. And Equinix would only require you or allow you to use 5 kilowatts of your 20 kilowatt allocation per hour for IT resources. The rest of the electricity was for cooling, to cool down your servers and pump cold air into the room. So electricity and power constraints have always been a problem, even going back to 2015, because it's very expensive to get. You have to communicate with like the county, the state, the local utility provider. It's like a whole supply chain.
So it was an issue before it was an issue.
Correct. Like public cloud companies were talking about this well in advance. You would even hear about capacity constraints where the power wasn't allocated and the data center couldn't be built, so the IT resources couldn't be shipped in. And this same trend has been exacerbated to a level I don't think anyone imagined, right?
Because the needs for electrical power are just exponentially higher.
That's right, because in traditional IT land, or back in the day, you would only really need 20 to 30 kilowatts per hour for your IT rack. For an Nvidia GPU in one of the more recent models that we're shipping, let's just say the Grace Hopper series, that was really consuming probably under 100 kilowatts per hour. But if you look at what they're going to start shipping, which is Blackwell Ultra, some of those go up to 600 and 700 kilowatts per hour. And by the way, that's the size of some people's entire data centers, right? So that's one rack.
So one rack of a new NVIDIA server with its GPUs
system,
basically consumes the same amount of power that an old Equinix entire data center
Correct.
uses. Okay. That's a lot of electricity.
Correct. And other countries have figured out how to bring on power very fast using nuclear, or just the government has been involved and they'll make those investments. With the US, we're kind of still figuring it out to advance this. I think the communication has been very good and directionally everyone's trying to work towards it. But you're really asking a supply chain to ramp up to a degree that I don't think the US has ever seen, right? This is...
Do you think we can do it?
With
and how soon do we need to do it?
Immediately. Power is complicated because you need big volumes, and all the systems that are being shipped out today use significant volumes of it. And it's probably impacting the speed at which the US can be competitive in the AI landscape. So power scarcity is a very, very big problem.
And that's why you're seeing deals for nuclear power.
Correct. I mean, I think the deal today was Amazon and Talon signing, I think it was 1,900 megawatts to come available at some time. When I was covering Equinix and Digital Realty, a big deal was 10 megawatts.
This is 1,900.
This is 1,900.
And they're going to do this with nuclear power plants?
Yeah.
They're going to build?
Unclear if they're doing build or if they just have to bring a part of the plant online or they need to do further investments. I didn't read deeper into it to see what structurally needs to change, but those deals are being forged now for power to be brought online in the future. So those are the numbers we're talking about today. And this is really before something like NVIDIA Blackwell Ultra is even shipping.
So this is the limiting factor in the US. If we don't solve this problem, we got a problem.
If you have access to unlimited volumes of electricity, you can accelerate a lot. And right now, we have to be very efficient with the way we build these data centers, with the way we design these models, so that way we're not sucking up all the electricity and having bad outputs. Right. So there is some sensitivity on the resources you're using because it's finite. It's very finite from an electrical perspective.
You've been very kind to talk about the whole landscape, but you are head of investor relations at Cisco. So let's talk Cisco. So let's do a little history of Cisco, because Cisco was like the hottest stock on planet Earth in the 90s, kind of languished for many, many years. It's got a new management team. They seem to be doing better. Walk us through a little history about what Cisco does and what's happened to the company over time.
Yeah. So at its core, it sells network switching technology. So the device that connects compute resources to end users like you and I. So our iPhones are engaging with applications on our phone. Those applications are interacting with the data center. And Cisco, in most cases, is the bridge, is the connector between our phones and all the way to those where those applications live, or the databases for those applications in a data center. When the internet really started ramping back up ramping initially in the .com era, the belief was the internet was going to be very ubiquitous, and you just needed millions of devices deployed everywhere to power up the internet and all of its potential applications that were going to be ramping up.
So people bought switches like lunatics.
Everyone was buying switches. Everyone was trying to stand up a network to allow these applications or the internet to grow and live. Right. So they were all trying to fuel this fire that they all believed was going to keep, keep growing in scale. So back then, there were a lot of dynamics that don't exist today. Back then, there were more fragmented buyers. There weren't trillion-dollar companies. The internet was pretty nascent. You didn't have developers and programming ecosystems. You didn't have very capable technologies. Spend velocity on technology was much slower than it is today. So things were directionally, the bet was correct because today we use the internet for everything. But I think what was incorrect was the speed at which adoption would move, and then the corresponding development of applications to service that adoption, right? So that's how things were different back then versus today. Fast forward to today, Cisco is a little bit of the same, but a little bit different as well. So we still sell switches, we still sell routers, which are core products to the company. We're developing our own chips, which allow AI models to run and communicate with their corresponding users very well. We have a pretty big security business. We have a large observability business as well, and a very large collaboration business, which includes things like WebEx, which people have used from time to time. So we are in multiple business lines, and we believe the company's relevance to AI and how AI has to travel or traverse through networks. We think we are a key enabler to this, and we're a key partner to Nvidia in this process.
So just let's backtrack for a second. I mean, the company was run for a very, very long time by its founder, and if this is new management, how's the company different before or after?
Back then,
It's subtle.
Yeah.
You don't, from someone like myself who's an investor, I don't see that on a day-to-day basis. But I'm very curious as to what has changed.
Yeah, I think the biggest change was in the former Cisco management. Cisco was the 900-pound gorilla, and everyone else was very subscale or much smaller in size. So whatever Cisco did, it was always the only cutting edge offering, and everybody wanted a piece of the action from a customer standpoint. So the prior management would have to innovate or acquire very quickly to service the demand or interest of customers. And that included like fueling the internet cycle, right? Or like the hype cycle that was growing at the time. Today, we're a lot bigger in enterprise. We are a lot bigger with cloud companies. We're a lot bigger in the security landscape, and we work with predominantly enterprises and governments, and again, also ramping up with cloud companies as well. But we are really partners to the customers to really take some of the strain and pressure of something as sensitive as keeping the network on. We'll develop the technologies to allow people to really kind of sleep well at night using this technology. So today we're closer as partners. We still develop a lot of the same technologies, but there are a lot of performance requirements that we have advanced. There are a lot of capabilities we've released, a lot of features, and now we're getting deeper and deeper in AI and in specifically agentic AI.
Do you think it's a fair criticism to say that Cisco, prior to recently, has lost a lot of market share to Arista? Or is that not a fair criticism?
I think what Arista got right was they developed switches with very low latencies that allowed them to win in very specific use cases. And at the time, those use cases just seemed very small.
Like what?
Like low latency trading for banks.
Okay.
And for exchanges. That same technology set, when you increase the speeds, so instead of having 1 gig moving at very like nanoseconds, if you scale it up to 100 gig, if you're still able to move that data in nanoseconds or milliseconds, that's pretty impressive, right? And that requires very rigorous engineering. And Arista went from working with financial institutions to working with cloud providers. And the deal was you needed to work very closely with those cloud providers to develop the solutions that they needed.
And Cisco wasn't providing the same level of service?
At the time, it just did not seem like something that was going to grow large enough for it to be truly compelling and required for us to engage.
And today?
Today, you have to.
And you do?
And we do. And we had several changes in the engineering teams. We've had an internal cultural change in the way we think about addressing the cloud providers. And that has opened up a lot more opportunities for us. And we have a chip silicon program that's very important. We have a system design team and program that's very important. We work a lot closer with large web scalers, and we even set out some targets for 2025, our fiscal year 2025, and we've exceeded those preliminary guideposts. And we're trying to get significantly larger in this space and accelerate a lot of the things that we believe web scalers will need, especially in the age of AI.
Let's talk about the recent quarter. One takeaway that I took from it was that past quarters, you guys were talking about how we're scaling up AI, but enterprise spending is not so great. And that was kind of a yin and yang. And correct me if I'm wrong, it felt like looking through all the numbers that enterprise spending has come back, AI spending is accelerating. So kind of all your businesses did well. You think that's fair?
I think that's generally fair. Again, like we're still working with the dynamic where enterprises are navigating a degree of uncertainty. In the public sector as well with the US Fed, there's DOGE as well. That's kind of there. We actually had a pretty good quarter in our fiscal Q3, which is the one we just reported with the federal government. But there still are parts and some deals that we think are going to be more fiscal year 26 events, right? So some things got pushed out, but really nothing has changed from an absolute dollar standpoint. So we're still building back from an enterprise and public sector perspective, and we are executing ahead of plan from an AI infrastructure and web scale activity standpoint.
So anything we haven't covered?
Let's see. I'm trying to think here on our list. I think here's one thing Cisco is really focused on. We're focusing on making it a lot easier for network engineers at enterprises and the public sector to really work with Cisco systems a lot easier, right? For a lot more needs. We're deploying things like something called Hyperfabric, making your security layer easier, making your agentic interaction. So every time you're trying to have any kind of app or software API or access point communicate with another app, we're trying to make it as easy and painless as possible for people to do that. So just reducing friction to adopting and deploying technologies. And Cisco's very focused on that. So we're accelerating that process, and we think as we get more things right and more technological bets right, we think it's going to be more relevant to more companies, more governments around the world. So really, it's been a big culture change, especially since I joined the company, and we think we're in the early innings.
What's been a culture change?
The change of like really trying to deploy the latest technologies at the edge to help accelerate and leap forward from an adoption standpoint, really the theme being AI apps in that adoption.
Thank you, Sam. That was really interesting. Thanks for being my guest.
Absolutely. Thank you very much, Steve, for having me.
Thank you. This podcast is for informational purposes only and does not constitute investment advice. The host and guests may hold positions in stocks discussed. Opinions expressed are their own and not recommendations. Please do your own due diligence and consult a licensed financial advisor before making any investment decisions.